Good morning. How's it going? It is November 6th, half an hour before the start of the market. So we had a huge week last week. And today, what we want to do is take a look at what forces might be driving the markets this week. So let's go ahead and take a look and see what we can discover. Now, we talked about some things yesterday when we did the aftermarket review, which was normally supposed to be on Friday afternoons, but because I was traveling, we did it yesterday instead. So what we want to do is take a look, see if everything that we said yesterday is still applying after a night of futures trading, and if any news happened over the or since yesterday. Okay, so it's looking like very mild. So just these are up, but randomly up. This is just barely up, not like maybe not even 0.1 or very close to 0.1%. So futures are not moving much over the weekend. And so we're going to start evaluating what the major market forces might be. So last couple of weeks, it's been earnings. Maybe only last week. I've been traveling too much, but it's been earnings in the recent times. Earnings has really been driving the market. So let's take a look and see if that still might be the case this week. I think for the most part, we've gotten the bigger players in the S&P 500 behind us. So I won't be surprised if something else takes over this week. Okay, so 3 pages. So not even, so 51 companies in the S&P 500. That's 10% of the S&P 500 is reporting this week. So it really does look like earnings is going to start to take a back seat. But let's see if we have any major large companies that might by itself move the markets. Berkshire, maybe, but they're usually don't have much surprises. Disney, sort of. They're a little bit of a blue chip stock, so they're not going to be super volatile. At least we don't expect them to be super volatile. eBay, once upon a time, but not so much anymore. FANG, so Diamondback Energy. So that's going to be an important energy stock to take a look at. And yesterday we pointed out XLK, so technologies and energies, as sectors that we wanted to pay attention to this week for the upside, and staples to pay attention to for the downside. Okay, so some staple stocks, Kellanova and IFF, International Flavors and Fragrances. And it doesn't really look like much else. Yeah, so in terms of earnings, very light, nothing that is going to really move markets. So we want to see, how about economic news? How about regular news? And otherwise, it's just going to be technicals, right? So let's see what's on the economic, Fed, if anything's going on with the Fed. So let's take a look at the economic news calendar. That finished refreshing already? Wow, okay. Nothing today. Tomorrow, international trades and goods and services, a little bit. I wouldn't call it a super huge market mover. Petroleum status, that's really more relevant for the energies. Jobless claims happens every single week, and we've gotten no surprises for many months. So really, it doesn't look like there's a lot of economic news that's going to move the market either. We've got random Fed speaker, random Fed speaker, random Fed speaker, random Fed speaker. This guy's speaking a lot. Another random Fed speaker, another random Fed speaker, a bunch of random Fed speakers. So they by themselves are really going to move much. So we're really going to be looking at technicals this week. So let's take a careful look at what's going on. Technically, we already did it in the aftermarket, but we'll do a quick review. So let's take a quick look at TLT. TLT made a huge move up into that MA50 and then started to move down. We had a couple gap ups and we didn't really break this trend right here, except for actually sort of, we did make a higher high right here. So we'll want to watch that carefully. But since we had these big gap ups and just like a more than parabolic move, we're really expecting this to either consolidate for a little bit or start to move downwards. If it starts to move downwards, that's a little bit of pressure on stocks. Let's look at our VIX. Our VIX should be way down. Yes, so our VIX is starting to reach more normal territory. So normally when we reach regular territory, we should consolidate. We don't necessarily bounce immediately back up. So we'll look forward to VIX being somewhat quiet during this period, which is good, which is a positive for the upside. And then let's look at our CPC. And our CPC is at 0.9, so not really giving us any signals. So, and we're going to fall back onto our technical analysis over here. So S&P 500, yesterday we determined that it's going to be about 60% favor to the upside, which is mild. It's not a huge upside. So what are the forces that are going for it? Well, we don't have any really news or economic news. So during this period from November to the end of the year, this is the time of the Santa Claus rally. So we've got seasonality going for us. We've got momentum going for us. We've had that super strong green every single day week that we had last week. We are above that MA50. We had a quiet weekend. So in the last 2 weeks or 3 weeks, our pattern has been sell off into the weekend, wait to see if any crazy news happens, and then on Monday, we start the rally for the week. But in this case, what do we have against us? Well, we had these gap ups and this super strong momentum, and normally that doesn't last very long. And this is, again, more than parabolic. So we would expect that we might consolidate or we might pull back a little bit and fill in this gap. And that's not to say that we've broken or we're going to break back down all the way back down, but we might need to pull back a little bit because this was too much too fast. We've hit horizontal resistance right here. So we might pull back to that EMA20 or MA200 before bouncing back up. What's great is that we've now matched these highs. So overall, all these things taken together, we still have a slight upward bias. To the downside, we also have to clear the MA50, and we've got earnings. So we don't have earnings surprises to help boost us up the same way we did over the last week. So what I'm going to expect, actually, what I need to do is I'm going to look at a lower time frame and look at the day trade. But for now, before we look at that, what we're concluding is that, yes, we have strong movement to upside. There is a potential for a pullback before moving higher. But what we really want to see is if that low is above the MA50 and we can get above it for a couple of days, that will convince us that at the very least we might consolidate here or move higher. So the most positive piece of news is this downward trend has been broken. Right, we're above that channel, and if we can stay up here, then we can reverse upwards. So let's take a look at a lower time frame and look at the S&P 500. And what I'm looking for is areas of resistance or support. And you can tell last week was basically completely to the upside. So the chances of a pullback are higher. So if I take this was the high of the week and the high of Friday. And we've got a little bit of consolidation in the area exactly where we are set to open. And then the next one that we can see is this horizontal area right here, maybe this low right here, and then this somewhere in between these, or in this region right here. I'm just going to draw it on the higher end. Okay. So what we see is that there's a little bit of resistance to the upside and plenty of room for us to go to the downside, even if I ignore these other levels. So if I just go with these lines right here, where we move today is going to be critical in deciding how this is going to look in the first half of the week. If we move up and we can clear this high right here, it's going to look very positive. It's going to look like we're going to have a strong move to the upside. If we move down and we break, let me just add one more level right here, down here, then we could be pulling all the way back before we start moving up. So this level right here is at 430 or 430.4. Let's just see where that correlates on the daily chart. Okay, so you see that that's a pullback to the MA 150 right here. I was talking about the EMA 20. Let's see where the EMA 20 is. It's at 425.4. So let's see if I 425.4. Okay, and if we see, so this is a little bit of a consolidation region here, but that was in the pre-market, so it's not necessarily that strong, but it's in between. It's a gap up right here from this close and this close. So that's a filling of the gap right here. So these are a couple important levels. We want to see today if we break out of this range. It's going to be critical. Are we going to move to the upside or are we going to move to the downside? Now, right now, we are expecting with slight favor to the upside that this can break out. But if we pull back down to this green line over here, it may not happen in just one day, although it could, because that was basically a one-day movement on Friday. So basically, if we undo Friday's movement, including the gap, then what are we doing? We're filling the gap from the Thursday to Friday gap, which makes sense, which is fine. And then we can potentially resume our movement upwards. So if we pull down to this level right here, that 430.4, that means don't freak out, right? That means we are still on that screen line right here. We're still, that's the MA 150. And if we bounce from there, then we're still on track on moving upwards. It's just that intraday or from a day-to-day basis, we may not go straight upwards, right? So right now, everything that I'm seeing technically, it still supports this slight favor towards the upside. And if we come in, we fill this gap before we go to the upside, or either one of these gaps, the first gap from Thursday to Friday or Wednesday to Thursday, that's going to be perfectly normal. We would still say that is a resumption or a change of the trend to the upside. And that's not necessarily, again, to say that we're going to make new highs, but at the very least, it looks like if we break this, or sorry, if we continue this reversal of trend to the upside, it looks like we could at least come close or match the previous high right here. We'll just have to see how long it takes and whether or not, if by the time we get here, it's Christmas or the end of the year, then that's our Santa Claus rally. But if it happens much sooner, then we could get a very strong Santa Claus rally and get a new high into the end of the year. So this week is going to be critical in forming our opinion of what might happen for the rest of the year. We went through an entire analysis yesterday on the sectors, so I'm not going to do that today. We've already taken a look at earnings. We've taken a look at the economic calendars. So we're just going to reiterate that what we really want to focus on for this week and today is, are we going to break out of that little range that we drew on the day chart? So it's a very thin range between 435 and 436.4. And we're going to watch that very carefully today, especially if we could move out of that range. And then we want to take a look at opportunities in XLK If the market is strong, then this will continue to move upwards. If it's weak, it'll consolidate. And if it's super weak, it'll move down, but we're not really expecting it to move down. So I would be comfortable going into longs in the strongest stocks in XLK. And then if we look at XLE was bouncing off of that MA200. It kind of took all week to do it. But as long as we can clear this EMA20, we can at least get to the MA50. And if we can clear that, then we'll have a W bottom right here, and then a potential breakout to the top. XLE, going into the winter, there's higher energy usage. As long as the economy stays strong, there's higher energy usage. As long as there's conflict in the Middle East, especially conflict anywhere, but conflict in the Middle East especially, that is a bullish force for XLE. So energies are looking like a very strong place, high probability place to put money to work, especially now that we've had a pullback that gives us really good entries. So I'd definitely be looking at XLE and then XLP hitting that MA50 and bouncing down. We're really going to see if this will pull back to downside back into this consolidation region, which is sort of the EMA 20 as well and EMA 8. And if it's really weak, then it can move further. And if we're going to become really bullish in the S&P 500, then we are going to expect money to leave the XLP sector and go more into tech, more into communications, more into retail, more into discretionary. But for now, the more bullish, the more certain area is XLK. This is looking much better than XLC, about the same as XLC actually. XLK, XLC, and then if I look at XLY, right, XLY is not nearly as strong as those two, and then XRT is not nearly as strong as XLY. So really to the upside, I would really focus on XLK. It's looking like XLC is looking like a pretty good place to go to put capital to work, and also XLE. So institutional traders, when they start seeing that there's a turnaround, these are the sectors that they're going to focus on. And especially if we start seeing IWM get stronger and clear that MA 200, then we'll know that, well, once it clears MA 200, we're going to be really optimistic about the end of the year. I really doubt we're going to match these pink lines that we drew before by the end of the year. That's like way too much to happen in such a short time frame. But at the very least, we can clear that MA 200 by the end of the year. And if that happens, then we'll have a very bullish case for the markets. All right, so we're about 10 minutes before the open. Just keep an eye, especially on this tight trading range in the S&P 500. And if I was day trading, we could look at Tesla. Amazon is fine. Apple. But I would really, really, really be focusing on the S&P 500. I wouldn't distract myself with anything else today. I would just really focus on the S&P 500 and these two levels, especially the 435 and the 436.5 or 436.4 areas. If we can break beyond those, then we're probably going to get very directional movement for the day. Otherwise, this is a pretty tight consolidated range. So it's unlikely, or it's pretty likely that we're going to break out of this range. But what we want to do is look for a breakout with volume, with momentum, or at the very least, if it breaks out and then pulls back, then moves with momentum and with volume, or breaks down, pulls back, and then moves down with volume or momentum. So just because this range is really tight, we don't want to get faked out. So it could trade in a slightly wider range and just consolidate throughout the day. What we're really looking for is that momentum move, that huge bar, or with a lot of volume, or slow movement, steady minute by minute movement with a lot of volume behind it. That's going to be our clue that we're going to start going directional. And then that will drive the direction for the week. overall, again, we're expecting a week to be a little bit higher. And as long as we don't break these two levels for the week, then we won't expect the week to be down. We'll expect to bounce off of these and move higher for the week. Okay, so we'll leave it there. It'll give us 10 minutes to prepare for the opening, and good luck. Have fun, most importantly, have fun, and hopefully you have a very profitable day, and I'll see you in the aftermarket.